next lecture is part 2 of a four-part series on legal timekeeping and billing practices. And this one's going to focus specifically on billing systems in law firms. The objectives in this lecture, we're going to define core billing vocabulary, and we're going to evaluate billing systems in law firms. First, some billing systems terminology. Billable hours, that means the time spent on client work that can be charged. Non-billable hours, those are internal tasks not charged to clients. You could also add to that administrative tasks, or define it that way. An invoice is a bill that's sent to the client. A retainer is an advance payment to secure legal services. A flat fee is a fixed price for a defined service. Hourly rate is a fee charged per hour of work. A matter is a specific case or project tracked for billing. Like the client's matter, they might have just one case. Maybe it's a contested dissolution of marriage, but maybe there's some other representation going on in an area like estate planning, because that's not uncommon to need that after a dissolution. And the next slide has some more. Okay, so a time entry. A time entry is the recording of the work performed. It's done in increments, tenth of an hour increments, and I'll be going into that in more detail as we navigate this 4-part lecture series. An increment is that minimum unit of time recorded, often 6 minutes. Trust account, or IOLTA, I-O-L-T-A, it's an acronym. Interest on lawyer trust accounts, IOLTA. So that's an account that's holding client funds, such as retainers or settlements, as a holding place for that, for the client's money. It's an account. It's a bank account, so you know. Disbursements, those are expenses billed to the client. Filing fees for the court is an example of a disbursement. Write-off, that's when time entered by a timekeeper, a billing timekeeper, is written off, maybe reduced or completely eliminated of the billed charges before the bill even goes out the door. The invoice goes out the door. A billing cycle, that's a schedule for issuing invoices. And accounts receivable, those are outstanding balances owed by clients. And then collections, that's the effort to recover unpaid invoices from clients who have not paid. So the process works like this in just general terms. Client and attorney reach an agreement, remembering paralegals should never set fees or negotiate a fee with a client. That would be unauthorized practice of law. And I'm hoping you can think about that term as you're listening to what I've covered in these 4-part series, because, whether it's a predictable type of case or an unpredictable type of case, if you think about it, that is a legal opinion. That's an opinion formed by the contemplation of the situation, of the case, by an attorney, and that's how they decide the fees. It's also how they set an attorney's rate as well, or a paralegal's rate too. Anyway, back to the point. Client and attorney reach an agreement, and then they perform their services, and as they do, they prepare these things called time slips, which we now call time entries. But this is a very old slide deck that I have put together. I have totally revamped, and I did not notice this word this time. I've seen it in other places and changed it. So a time slip is it's an old term. Do your time slips, because they used to be on slips of paper. It's kind of silly, right? But that's how we did it. Expenses then are incurred as well. We talked about that, such as court filing fees. And then time entries and expenses get entered into the timekeeping or the billing system. Use timekeeping system, billing system, one of those will work. All right, more on the process. Once that work is performed and they're entered, then there are pre-billing reports that are done. These are just reports. This is what the bill is going to look like. It's very draft. It's usually printed on crummy paper. No, I'm kidding. But It's a pre-billing report. It's generated by the system. It shows the time billed. It shows the work performed in a draft form. It's at this point the attorney will review that. They'll make some changes, such as writing down time. Say the attorney feels that the person spent more time than it should have taken. Maybe it's a new timekeeper, new person. They aren't as healed in, and so maybe it took them 5 hours and the lawyer feels it should only take 4. Or maybe there's a value to this. That's another reason too. I mean, maybe the value to write down time is like, we didn't get much value for this client. It was what it was. Let's be kind and charge less. So write down the time. Those are 2 examples. Hourly rates can change if so long as it follows a fee agreement. But the other thing that happens is we have lawyers and paralegal staff can have different rates. You saw that in the part 1 of the lecture, where a phone call is like as little as $40 or $15 for a paralegal. But maybe when maybe the standard rate is $15, but by looking at the time entries that the biller, the person who billed the time, who put it on the slip or into the computer, they recognized that the event itself was a little more complex than hello, how are you, and thank you for this information, to maybe some decisions being made, some more complex conversation happening, more complex more complex information to give over to the, I mean, just, it's more complex. I'll stop at that. I'm getting too far with that. And then the client billings that's like the draft stage, and that's when the client billings are generated. And so after the client billings, or invoices if you want to call them that, are generated, they're mailed, they do management reports. And these are the reports that are used to look at things such as, are all of us productive? Are we all making money for the firm? Are there, are there areas, and management reports are also inclined to help with decisions of business. Where are we going? How's this business doing? So management reports are just that, something to help manage the firm as a whole, the stakeholders such as timekeepers, and what they're doing and how productive they are. That's generally what it is. Then client payments, they get entered into the billing system. It's typically a computerized system in these days. Like I said earlier in the part 1 or something, we used time slips. They were these fancy little slips of paper long time ago. So what is a billing system? In the context of a law firm's billing practices, this system is this structured framework. It's step outside just these borders of keeping time and writing it down and that sort of thing. Remember that the framework includes policies, processes, and tools, and those are what govern things like how time is recorded, how fees are calculated, how invoices are generated, and how payments are managed. It's not just software or spreadsheets. It's this integrated set of rules and workflows and ethical standards that ensure the billing is accurate, transparent, and compliant with professional responsibility. So if you have a well-designed billing system, you're going to create a consistent process across the firm. Everybody is moving along and in the same mind sight, if you will, and builds trust with your clients because it's consistent. There's nothing worse than not billing monthly. Not only is it hard on the firm to not get that money monthly, but the clients don't like random bills, and it'll support the financial stability in that way and others. So other functions, well, it's got to be accurate, and that means it's going to capture the billable hours in real time, and that way we're not losing revenue. It's going to differentiate, you're going to be able to differentiate as a user of the tracking. You're going to be able to differentiate between what is billable and what is not a billable task. And others in the firm, of course, do too. When they review the pre-bills, they're looking for this. Did you put something down that really might not be billable, or can it be separated from the billable task and reduce the billable task because of removing that time spent on what's not billable? So it's going to support multiple billing methods. We've talked about those in part 1, the hourly, flat rate, fee, contingency fee. The transparency is important because the invoices need to be clear, they need to be detailed. So the client gets a bill or an invoice that shows the task performed, shows the time spent, and the expenses. It's going to, a transparent system will reduce client disputes because it's understandable. They look at the bill and it makes sense. A lot of this whole system gets to this point of reducing this. Anywhere you look, that's one thing you want to reduce. And a transparent invoicing system or billing system, it needs to be customized for different client needs. Also, in the terms of functions of a successful billing system, compliance and ethical standards have to be met with the system. So again, this is a lot of stuff. It's, we talked about, it's the policies, it's the whole picture, the broad picture, not just this electronic. Okay, I'm not quite sure where I was because a lot of noise was just going on in my background. So I'm just going to start this slide again. Financial management is a part of a successful billing system. We're going to be tracking revenue and expenses and cash flow. All those things have to be tracked. So the computer software apps have to help with that. The people involved that do the reviewing and the management reports and what kind of information has to be tracked to help the firm manage in an ideal financial capacity. So they're going to be reporting dashboards if you're using a software app that allows for that. So now it's part of the computerized aspect of it. And then it's going to help us forecast, because of those management reports, areas like profitability and resource allocation. There's client relationship support and management that comes from your billing system. Again, predictable, fair billing kind of goes real similarly to the transparent piece, but there'll be some flexible payment options that firms can offer to their clients, such as installments or online payment. And then, obviously, as is always the case, we're trying to avoid disputes in fees. And in doing so, we need to keep documentation, and we can do that with a really solid, successful billing system. Overall, some functions, that accurate timekeeping is going to prevent lost revenue, and in practice, that's logging research hours immediately. So that the example in practice, I think what I'm trying to get at here is what ways can we, how should the policies and procedures, etc., in what ways do these points help, and how can I give an example to you? So the second one, transparent invoicing. Again, builds client trust, but when we have an itemized bill showing drafting versus calls, what I'm getting at there is it can be, clients can feel intimidated when they see a bill that has a whole lot of work all piled up into one thing. And we're going to get to that in part 4 of this lecture series on how to appropriately write your time down and batch it out like you should into different types of tasks. Compliance, again, ethical violations are avoided, and the system will have a proper trust account management rules and policies and appropriate software used for this process. Efficiency, so we can save time and reduce errors. So automated invoice reminders, so every 30 days for the clients. I remember back in the day when we did bills the hard way, it was always at one time per month. Everybody got a bill. And I remember those people in the billing office. It was, oh boy, they were stressed. Running around looking for everybody's time entries, people that were slow to do it. Oh my. Part of the billing system is doing it timely, getting them turned in on time. Financial management, of course, supports the firm's growth, and we're going to have a cash flow report available to us as part of the management reports that are financial management reports that we can get from the billing system itself, if it's the application used or the whole system as a whole, calling it all together. And then client support, because we want to strengthen the relationships at all times, and we those areas like a flexible online payment portal, and also something in regard to being able to pay in installments. All right, so that is the conclusion of this part 2, and we'll move on to part 3. And thank you very much.